Hello everyone. I'm going to show you the strategy that I use in Forex to produce results. First of all, as you can see, this is my chart on EUR USD, and as a disclaimer, this is for teaching or informational purposes only. You may or may not make money using this strategy, but I think it's a good strategy and it's one I use and one I tend to stick with. But as you can see, I have three indicators here: green, a blue, and a yellow. These are the colors that I use. You don't necessarily have to use the colors that I use, but these are the colors that I use. My green indicator, which is a 60-minute indicator, and sometimes I change that to 50, but mostly 60 because I'm trading on a 1-hour chart. I leave that at 60 or create that at 60. Then I have a blue indicator, which is my 15-minute EMA, exponential moving average, and then I have a yellow 5-minute EMA, exponential moving average. Now the way that this works is, as you can see right now, EUR USD on this particular chart as of what is this right here, as of November the 2nd at 4 o'clock 2015 is in a downtrend. You see, it's in a downtrend. Now, if I had taken a trade right here, I wouldn't have taken it when it started the downtrend here, because you have a lot of basing in here. And what I mean by basing is sideways movement. Basically, the high, once it started down and it came back up, was right there. And I'm going to make that line white so you can see it a little better, hopefully. There we go. And the low was right here. Move that up to that green candle and wick right there. So here's all of this basing in here. It's in there right there. It goes out of it. It comes back in. It goes below it. It comes back in. It goes out of it. It comes back in. It hits it. It comes back up. It hits it on the uptrend. And then all of a sudden you have this red candle right here. This red candle right here, which was created on November the 3rd, 2015 at 10 o'clock. Now once that candle broke this low here where this white line is, as you can see, this green 60 and this blue 15 and this yellow 5 all separated. So technically I probably, well, there's no probably to it, technically I would have gotten in on this second candle right here. It doesn't matter. I could have got in at the high of that wick anywhere in this body or at the low of this wick. I could have gotten in. But what I normally do is I like the trade to come to me. So what I would do is I would have probably created a pending trade, which you can do by right-clicking. Which you can do by going here to EUR USD and clicking and bringing up this chart. Your lot size determines how much money you have in your account. As you can see, I have $808.04, and this is my live account, by the way. If I had drawn these lines while all of this basing was occurring, I would have said, okay, once all of this basing is done and I have a candle break this low, I want to get in roughly somewhere below that low. So not knowing that this candle has created itself, I probably would have done this. I would have created a stop line, which I'm going to make red, and placed it at the bottom of the wick of this green candle that you see right there. That's my stop out. And then I would have created a blue candle, a blue line, a blue line and placed it roughly at 64 pips below that. So basically what happens is this white line right here says to me that if I get a candle that breaks below that white line and it goes to my entry point, which is 1.09926, that's where I want to enter at. So I would enter on this blue line. Once my entry takes place, all I have to do is ride it down to take profit roughly at this green line, this green horizontal line that I'm creating on that candle. Or what you can do is, since you don't know that that candle is going to continue down or it's going to continue up like you see here, when this green candle forms on the next hour, I would get out and take profit. Now if you have patience, you could have just rode it all further down. Even though it went up a little bit, these lines, this 5 and this 15, never touched. They never crossed, in other words, to signal a uptrend. May not have been a strong uptrend, but it never crossed to signal an uptrend. It came close to it, but then as you can see, it continued on down further. As it continued down further, it based again in here, continued down, came back up, this green line here, crossed that blue line, which means it's going to go into a slight uptrend. As you can see, this yellow line went up, touched and crossed that blue line just a little bit, came back down below it, below the blue line, went back up, touched it, crossed it, and went up to an uptrend here. Now this area here, it based again, and you can see this long red candle. That was November the 6th, 2015, non-farm payroll. Being that this was in a downtrend, it continued on down. And it continued on down for whatever reason. But if you had been in a trade during this basing here, as this yellow 5-minute EMA crossed back below this 15 EMA and separated, it just tanked. And that's basically the strategy I use to make money trading Forex. You could take small pips or small gains and get in and get out, or you can get in and just ride it down as long as the 15-minute EMA is below the 60-minute EMA, and as long as the 5-minute EMA is below the 15-minute and the 60-minute EMA, and they're not touching. As you can see, there's space between all three. They're not touching. Came close to touching here, came close to touching there, came close to touching there, but ultimately continued down. Now when it gets in here, if you're staying in a trade even after it drops here and it goes back up, when it gets close to there and you've made money because you were in it up here, I would get out and take my money. I wouldn't risk it, because as you can see, what happened is it came down here, it went up, touched it, crossed it, and you got a lot of basing in here. So your basing starts again roughly, and I'm gonna move this down. Your basing starts again right at the high of that wick on that candle and at the low of the wick on that candle. So that's a lot of basing. It came down, went down, almost touched it here, went up, came down, and it broke this support. It never broke resistance again going back up, but it broke that support. Once it broke that support, there's another trend of a lower low. So now that it's down here after non-farm payroll, your support moves from where it was to here, and your resistance is here. So what I don't do is I don't trade during basing. This is basing. I wait for the next trend to break. So if this goes up and breaks this, it might continue up. But based on the fact that it's in a downtrend, I believe that's a fake out. So I would wait for it to break the low of this line and get in a sell and let it continue down. Basically, I'm in a sale right now trading gold. And if I look at gold, it did exactly that. Here's non-farm payroll. I got in at this blue line right there and got out at this red line right here. It's basing, but it broke below the body of this candle, this red candle here, and I'm up $8. Technically, I'm up $5.53 because the broker takes a cut, but I'm basically up $8. And gold has been going down since September the 28th, so I'm pretty sure that I'll make probably another, with the 20-cent lot, I'll probably make another maybe 150, 200 bucks if this continues on down next week. I hope this video helped someone. If you have any questions, you can email me at icloppse@gmail.com. And I hope you guys have a blessed day. Thank you for watching.